Assalamualaikum everyone. Before we begin, I would like to introduce our teammates. We are from group 3 that consists of me, Shahirul Shazwan, my colleagues Siti Zulaika, Damia Humaira, Nabila Shafika, and Danish Zulfan. We are moving on to the first slide.
Hi, I am Siti Zulaika. Today I will explain about who are the users of financial statement. First of all, we have top management which CEO, CFO, COO and etc. This management use financial data for strategic decisions making, budgeting and performance evaluations. Secondly, we have finance department which manage cash flow, investment and financial planning based on accounting record. Thirdly, we have accounting department which records transaction, prepare financial statement. Next one, we have internal auditors which examine financial records for accuracy, internal controls and fraud detection. Moreover, we also have department manager which use accounting data for budgeting, cost control and evaluating department performance. Moreover, we also have HR department which use payroll and financial reports for salary distributions, benefit administration and workforce planning. We also have operation team which monitors production costs, inventory management and resource allocation using financial data. Moreover, we have board of director reviews financial statement to make governance and investment decision. Last but not least, we also have project managers which analyze budget, expense and financial feasibility of projects.
Hi, my name is Muhammad Danish Zulfan bin Sharizad, and I would like to explain about external users. External users of accounting data are individuals or entities outside of a company who rely on financial information to make decisions. These users do not have direct access to internal records, but depend on publicly available financial statements and reports. Type of external users. The first one is investor and shareholders, creditors and lenders, government agencies, suppliers and vendors, customers, competitors, and general public and researchers. Since external users do not have direct access to internal records, company must follow standardized accounting principles like GAAP or IFRS to ensure transparency, consistency, and comparability in financial reporting.
Now we are moving to sole proprietorship, which also known as Milikan Tunggal. It is a business that is owned and managed by one person only. To start the business, the owner can use their personal savings, which most common source of capital. Other than that, owner can making bank loans or personal loans. Next, owner can raise funds from their family and friends without giving ownership right. For the liability, owner have unlimited liability. For instance, if the business have loss or debt, the owner must pay by using their personal assets only. For the legal requirement, we have business registration. To register, you must choose your business name, either your own name, your personal name, or trade name. You can register with Companies Commission of Malaysia, which is SSM. Next, you prepare your document like Borang PNA 42 and Borang A. Then you must pay the fee, which is RM30 for your personal name and RM16 for your trade name. The next one is business license and permits to ensure that the business is operating legally and under control. Their main legislation also need business registration. It is to ensure that our business are protected from being used by others and at the same time can get customer trust. Second, we have personal liability, which is very important because it determines the legal responsibilities of individual in business and financial matters. Lastly, we have employment laws that are also important because they protect the right thing between employees and employer so that they can ensuring fair between them. For the tax, it's come from three sources, which is first from sales and service tax. Sales and service tax is when the business sells good, customer must pay a tax on their purchase, like paying GST for certain business. Then it also comes from personal income tax, which is when the employees receiving goods profits, they must pay income to the government. Or if a person get their month salary, a small amount from his salary will be deducted. The last one is financial statement. Usually, it will be prepared by the owner or the owner will appoint an accountant to make the statement. Financial statement is need in the business in order to make sure the business make smart decision on finance and can plan for growth the business.
Hi, so today I'm going to talk about partnership in business. So, partnership in business is a legal arrangement owned by two or more individuals. Then, the capital contribution, it is referring to the amount of money, assets, and also property. So in this term, we have two types of liability. So number one is unlimited liability, where partners share equal responsibility. For example, if the business fail, so each partner must use their own money or their personal asset to settle down the business debt. And then the general partnership is one of the examples that rely on the unlimited liability. And the second one, we have limited liability, where limited partner only responsible for amount invested. For example, if you are investing for 5,000, then in the future, if the business fail, then you need to pay only for that 5,000 only, and your personal asset are being protected. Then limited partnership and also limited liability partnership is rely on the limited liability. For the legal requirement, number one, if you want to run a business, you must check a viable name for registration. And number two, this is quite important, where you need to draft a partnership agreement, contents of the exit terms, responsibility, and also partner roles. So if anything happen in the future, then you can just refer on the agreement. And number three, when you run a business, you must register with the government. And for Malaysia, you must register with Suruhanjaya Syarikat Malaysia SSM. And number four, you must apply business license and also permit. Last but not least, for taxation in partnerships of business, it doesn't same with the company where profits tax as personal income, where each person must pay for the income tax for every profit or every income that they gain. So that's all from me for partnership in business. Then I will pass to Shahirul Shazwan to explain further.
Alright, everyone, let's talk about the third form of business structure, that is company. In Malaysia, we have two types of company, that is public listed company, also known as Syarikat Awam Berhad, and private company, Syarikat Sendirian Berhad. Alright, first let's talk about ownership. A public listed company has no limits on the number of shareholders. That means they are unlimited. Anyone can buy shares and become a part owner of the company. These shares are listed and traded on Bursa Malaysia. On the other hand, a private company can have a maximum of 50 shareholders. It is privately owned, meaning shares are not available to the general public. Now we're moving on to the second point, which is shares. In a public listed company, shares are freely traded on the stock exchange. Investors can buy or sell their shares at any time, providing liquidity and investment opportunities. However, in a private company, shares are not publicly traded. Any transfer or sale of shares requires approval from existing shareholders. Now, the capital contribution. Public listed company raise capital through an initial public offering or IPO. This process allows them to sell shares to the public, generating large amounts of capital for business expansion. In contrast, private companies raise funds through private investments from their shareholders. They rely on their owners, business partners, or investors to contribute to their own capital. Now, let's talk about liability. One key similarity between public listed companies and private companies is that both offer limited liability. This means that shareholders are only responsible for the amount they have invested and are not personally liable for their company debts. Now, legal and regulatory requirements. Public listed company must comply with the strict regulations set by Bursa Malaysia, the Security Commission, and the Companies Commission of Malaysia, SSM. They are subject to more reporting and governance requirements to protect investors. On the other hand, private companies have fewer regulatory requirements and mainly follow the Companies Act 2016, making it easier to operate with less administrative burden. Now, in main legislation, both types of company are governed by the Companies Act 2016. However, public listed company must also follow the Capital Markets and Services Act 2007 and Bursa Malaysia's listing requirements. These additional laws in order to ensure transparency, accountability, and investor protection. Now let's talk about the financial statement. Public listed company are required to prepare and disclose audited financial statements to the public. This ensures transparency for investors and regulatory bodies. On the other hand, private companies only need to prepare financial statements, and auditing is not mandatory unless they meet specific criteria. This makes compliance easier for smaller businesses. About selling shares. One major difference is how shares are sold. In public listed company, shares can be freely sold and traded on the stock exchange without restrictions. However, in a private company, shares cannot be freely transferred. Existing shareholders usually have the first right to buy shares before they can be offered to outsiders. This process maintains ownership control but limits liquidity. Now, lastly, about taxation. Taxation is another key difference. Public listed companies pay a corporate tax rate of 24% of their profits. Private companies, especially small and medium enterprises, for example SME, enjoy a lower tax rate of 70% on the first 600,000 of profit. With any additional profit, tax to 24%. This tax benefit encourages business to growth among SMEs. And that's all for the companies.
As we move forward, let's dive into the conclusion. So, the financial statement are the essential for every business as they provide the key insight for the decision making and also compliance. Different users such as investor and creditor rely on them to access the company's financial health. In short, they're not just a number, but they are the backbone of business for decision making, transparency, and also growth. So, in the other hand, based on the form of business structure, we can learn that every structure has their own benefits and risks. So, business must choose the best one that fit their goals and operations. So, that's all what I can conclude for this presentation. Thank you.